Good morning, friends. The office bearers, speaker, and dignitaries who were on the dais, off the dais, and my dear friends. Saturday morning, season of tax audit, and still you find, though there is a curtain in between to divide the auditorium in large number, that indicates the new trend in audit. But friends, when I'm standing before you, you can understand my position. In cricket, if the opening batsman scores nicely, then the one down is comfortable, though he has to pad for a long time. In case of seminar, when your opening batsman is hitting centuries after centuries, and then you have to stand before the audience, that gives some butterflies in your stomach, and possibly that is a thing. So I think you can adjust with me to that extent. First butterfly is the topic per se, and therefore usually I don't go for PowerPoint presentation because I believe I don't do it, never do it post lunch session, definitely. But even for others, I rarely do that one. The reason is there has to be a connect between the speaker and the audience. So eye-to-eye contact should be there. Because right now people are busy in writing down that name itself on your writing pad. And same is the case with me, and therefore I thought to at least put that name over here, that identifying red flags and early warning signals in financial management, money trail, fund diversion techniques, tracing, layering, siphoning methods. Such a vast topic, you can say. Now what happens, what is forensic audit or forensic accounting, whatever name you say, that we have learned. So fortunately my job is comparatively easy, but friends, before we go to any forensic accounting or forensic audit, the first stage is to identify the early warning signals and red flag the accounts. This has got some impetus from the Reserve Bank of India circular, wherein they have identified early warning signals, and they expected the banks to have those signals or the parameters built in the system so that you can get. It is something like this one, no? Because usually we learn reporting by exception, you can say. If at all everything is fair and true and fair, we have no problem. But if there is qualification, we highlight that one. In internal audit report, if something is wrong, we highlight that one. So this is called as reporting by exception. Now here also, if there is any problem or excuse me, any exceptional situations which gives you rise to have some doubt about the behavioral pattern of a particular thing, then in that case, it's there. It is there. Thank you. So nice of you. Then in that case, we concentrate on that one. As we have seen various analytical techniques in our first session, wherein you get the signal and then you start investigation further or doing some more processes in that one. But before I go to all these things, let me be there, because possibly some gray hairs over here gives me a thought that the profession few years back, maybe 35 years back, and profession right now. I have got a live example, 1912, New India Assurance Company. There was an audit report which runs into 2 lines by F. Ferguson, which says the above financial statements are drawn as per books of accounts and found to be correct. This is the audit report, which I can remember right now after reading that particular. Now, how many of you really will be able to remember our audit report, what we sign every day and now. Number of pages, around 5 to 6 pages. Auditor's responsibility, auditor's responsibility, opinion, modified opinion, adverse opinion, disclaimer, then basis for that particular thing. Not only that one, what you are supposed to report is if there is any additional information which is not covered by the financial statements, but they are financial information which is reflected in any of the report given by the board, whether that is correct or not, that is also supposed to be there. You have got, if there is qualification, you may classify it as emphasis of matter or other matters. But as if that is not enough, you have got key audit matters to be reported in the report. So various, what you can say, gamut of all these things. Why do we need all these things? One is, we have to opine on that particular thing. At the same time, if you see Schedule 3 of the Companies Act, which expects the organization to disclose certain facts in their financial statements. See, nowadays, in fact, the financial statements, the actual balance sheet and profit and loss account is hardly few pages. But disclosure has got that 80-20 rule, Pareto's law. So that is there. 20% is your real financial statements, profit and loss account and balance sheet, while the disclosures are around 80 pages. Now that is the situation. Why do you require that particular thing? It's a point to be pondered upon. And therefore, what is more important is, as an auditor, our responsibilities are increasing. Not only we have to give the opinion on financial statements, but whether all disclosures they are done over there, whether they are correct or not, and do they give any indication to you. I'll come to that one by one, because my job is very easy. This is early warning signals in financial statements, it is said. So my talk will be restricted to some extent on financial statements and maybe what RBI had said as far as the banking industry is concerned, to capture certain early warning signals as far as these things are concerned. And therefore, what is the situation? That is, it is more onto the system based. No more it is sampling and just checking, verifying, vouching, posting, totaling. These are all gone now. Now I have to do the totaling. Let me tell you, when there is Excel rounding of differences in your balance sheet, face of the balance sheet, because most of the occasions what happens, 2 plus 2 doesn't exactly come as 4. It sometimes comes as 5 also. In Excel balance sheets, when you round, and especially with the rounding of to thousands, hundreds and all these things, you may experience this one. At one of the audit place, good organization, they have said, oh, rounding of ka difference so chalta hi hai, why do you want to bother? I said, on face of the balance sheet, I don't want any totaling difference, at least with the last digit also. So that was the situation. And after 3 years, when we are retiring from that organization, he specifically mentioned this is a firm which gave us the habit of looking at the last digit total of my financial statement. That is what CFO mentioned to me. So that was a good thing. Now, these are the situations. It is more onto the, what you can say, no doubt you have to depend or verify the facts, but at the same time, more thrust is on analytics. No more sampling techniques. It is basically risk-based sampling is more important, because what you do is first you analyze the data, identify the risky areas, and then select your sample. When I select the account in bank to be verified, what I do, I get entire dump. I analyze it and then try to see where there is a abnormal behavior in the account, and then accordingly I go for it. Statement of non-performing asset in the bank balance sheet. What do? Whatever is identified, no doubt it will be identified as NPA. But my job as an auditor is to identify something which is not identified as NPA. And how do I get it? I go to the overdue report, analyze it, and try to see where there are movements around 85 to 95 days delinquency, and then I try to fetch those samples. So this is the way we do the audit. Then as far as the audit reporting is concerned, if you see earlier only one audit report is concerned, 1986 or 87 when I qualified, I signed one report which was a single page report. In case of bank branch audit, it was just saying that yes, true and fair, if you feel like anything to be qualified as doubtful date, then you have to just give one by way of note that kindly consider these accounts, we feel it is to be classified as doubtful date. Now of course there are objective criteria and you get all these things, but apart from audit report, what you have to report is, you have to say internal financial control on financial reporting, then CARO, which has got all 20 clauses pertaining to various aspects, which is also something like early warning signal. Otherwise you don't have any reason to say whether there is any Benami transactions or Benami property held by the company, or the stock statement submitted to the bank has got the following difference as compared to the books of accounts. That clause will not be there. These are all early warning signals, and therefore even on CARO you have to do mention that particular thing. And as I mentioned, in audit report, you have got not only the audit report but other things, that is additional reporting like other information. Then you have got 11G, that section clauses, whereby even you have to find out the money trail, any advance received or any advance made, where the ultimate beneficiary is somebody who is a related party but transaction is true. This is nothing else but, you can say, siphoning methods, or you can say fund diversion, etc. Now these are all things which as an auditor, and therefore what audit we do is not mere audit. I can say this can be called as, I can exaggerate, by exaggeration I can say this is forensic audit. Because you have to look into all these areas. If you don't look at it, you will be failing in your duty. You have got always the fear of NAFRA. Some disciplinary commentary earlier it was there. But now NAFRA, peer review, quality review, all these aspects are there. So knowing that, I think we should take care of this one. Now, issue was about the frauds, but fraud is in detail dealt in the first session. So I'll shorten my presentation. What happens is, we have learned that learning without example is not real learning. That is what in first session we learned, that particular thing. Now therefore, few examples of this one. I can just tell you few things. There was a parliamentary delegation way back, went to England to have some discussion over there, and that was those were the days many years back where the cutlery for all such type of Shahi Mejwani used to be in gold. So the spoons were of gold and all these things. So naturally when it is parliamentary delegation, naturally the people from all parties will be there. You know party politics now, so I need not explain, and I am not naming it also because I don't want to give political color to the example. One party person who was sitting in front of the other party person, he couldn't resist his temptation to steal out one golden spoon out of that particular thing, and therefore what he did was, he picked up the golden spoon and kept it into his pocket, saying that it is hidden properly so that he can take it out. The other gentleman who was opposite to that one, for opposite party, he tried to see that particular and had a different thought. So what he did was, whenever everybody was talking and all these things, he said, we Indians are great magicians also. What? Of course, magician, you know all politicians are magicians, that's a different issue. But this magician is, I'll tell you one magic trick over here. Look, this is a spoon, I'm keeping it in my pocket, and you will find it, you will get it from his pocket. So that is the magic. Now what happened? The gentleman stole the spoon, golden spoon, graciously I can say, and the other person has to shell out what he had done earlier. So doing, undoing. Now what happens? This is siphoning. What method one use is a matter of method, but from one place to another place, either you can say gracefully, deliberately, or whatever way you do, that is the way in which you do this particular thing. I can give various examples, but one small example I think how fraud can take place. I don't know how many of you know that the few years back it was very common, and some of the cooperative credit societies do have this particular product as common product, that daily deposit scheme. Are you aware of it? There are collecting agents, they go in market, they collect daily some deposit, 100 rupees, at that point of time possibly 10 rupees, 15 rupees, whatever way installment you fix, get it. What bank used to do, bank used to, at that point of time, interest rate was 5%. For this daily deposit, they used to give 3% interest rate. So there was, bank used to get funds at cheaper rate. Cost of capital, cost of funds was comparatively cheaper. And they used to compensate saying that we can pay collecting agent 3%. So if I collect 1,000 rupees, 3% of there is my commission. Amount will be there in that daily deposit scheme in that bank. My bank deposit increases. Though bank was not having much thing because commission was there, for statistics purpose with the RBI, they can very well show that cost of fund is less because commission was not added to the cost of funds. That was called as operating expenses. So that was the advantage by which bank used to encash this situation. Now the gentleman who was the collecting agent, what he used to do? He will open 100 different accounts. At that point of time, KYC was not very common, so it was not correlated to PAN or Aadhaar, etc., etc. So I'll open 100 accounts, go on depositing daily some amount because it used to be cash collection. And then I get 3% commission on my collection. Usually the term used to be for 1 year with a rider that after 6 months, if you close it, then you have no penalty, you can get the amount with interest totally. If at all before 6 months you close for any emergency, then you will not get any interest. So naturally people will go after 6 months only because at least some interest you will get. Now the collecting agent will have a pool of 100 people. They will open the account. Account is open. Collecting pool, suppose 10,000 rupees is there in those 100 accounts. On daily basis it goes to 1 lakh or 2 lakhs rupees or whatever amount it is. I premature those things after 6 months. What I do, I get immediately the cash inflow because the collecting agent used to be somebody from the finance field. So naturally he can, for 6 months or temporary market finance, etc., he used to roll that money. And as and when required, accordingly, open another 100 accounts with some 1 year maturity and go on depositing the amount. What happened? Again, one source of income, cash flow, I get 3% for first 6 months and 3% for next 6 months. So that's a benefit for me. Funds immediately available with me after 6 months, I can roll it over for 6 months in the market and get interest at the market rate. And I enrich it. Then banks realize this product, apart from the control aspect, that is whether deposit is there, some siphoning of fund is there, whatever jugglery they used to do. Banks stop this scheme. And that is how, this is fraud. Something which is done deliberately with the intention to defraud something. Somebody may say it's a legal fraud. Okay, fine. But ultimately it's a fraud. Whether it is legal or illegal. Legally you can sustain with that one is legal fraud, I can say. Legally, if it is not sustainable, then it's an illegal fraud. So such type of example we come across in day-to-day life, and therefore I think we have to be very cautious and conscious, and therefore RBI definition of fraud, misappropriation and criminal breach of trust, then this is already there. If you see, whatever I am saying is nothing new, let me tell you, because I always believe in one thing, that distinction between three terms, which is my favorite philosophy, you can say: information, knowledge and wisdom. This is information. When it becomes knowledge, when you read that one, it is knowledge. And if you apply that one, it is your wisdom. So information is there for everybody. To become it knowledge or not is your choice. And the wisdom differs from person to person, because application of knowledge is normally different with the person. So how you apply that one is more important. So fraudulent encashment through forged instruments, we have seen check forgery, the manipulations of the books of accounts. A particular bank, I don't name it, was having 2 sets of accounts, and even the Reserve Bank could not identify in their inspection for number of years. When the bubble burst, then only it was publicly known. The bank got closed. Finally, they have to merge, and who were the sufferers? The depositors, because they have to undergo all the pains. Now, this is a situation. So, manipulation in the accounts through fictitious accounts and conversion of property. Then unauthorized credit facility extended for rewards or illegal gratification. See, very frankly, any balance sheet you get where marketing expenses, gifting expenses, professional fees, these expenses are more than reasonable, suspect over there. Why it is so? Comparative year to year, we always do it because that is available with us. But when you find something exceptional, dig into that particular thing. And few accounts like this one is marketing expenses, advertisement expenses, seminars and conferences, and then professional fees. These are few things which, as an auditor, we should have that deep dive, and don't merely depend on your assistant, because assistants, their application of knowledge and your application of knowledge, I believe that it differs, and where your application of knowledge is enhancement. Knowing that, I think we should adopt the techniques what we can really do that. So these are various things. Irregularities in foreign exchange transaction, that is the most important. Diamond export few years back was in limelight. Under invoicing, over invoicing, etc. that was there. And then subsequently, of course, one good thing is there. As I always say, that I respect my profession and I enjoy, I respect my qualification and I enjoy my profession. Reason is, and unless you do that one, I think you will not be able to give justice to the work. Why so? Reason is, this is one profession wherein you are exposed to entire industry by and large, where you get enroads to various industries, and at the same time, if you do your job with all sincerity, you will definitely enjoy the profession. Reason is, it's a well-respected profession, except I'm not talking of black sheeps, but by and large, this profession is well-respected. The moment I stand up and say I'm a chartered accountant, people have got different thing. When I was doing some film industry assignment, there only one person had said that idhar ka mal udhar. I said that is for accountant, not for auditors. So that's a different issue. That's a usual dialogue for Mehtajis over there in film industry, but that's a different issue. Now, coming to this one, so irregularity, cheating, forgery, and any other type of fraud that is coming as specific head above. Ultimately, it's what you can say, everyday change industry. What is a skill which you require? One is accounting knowledge, perfect accounting knowledge. Now, problem is, how do we know that particular? Nowadays, we work on the softwares, application softwares. So, debit credit fundas have to be very clear. The golden rules of accountancy, if somebody asks, I don't know how many of, it's a bold statement, but how many of us are going to remember all three types of accounts, debit what comes in, credit what goes out, and all this. It's in college first day lecture in accountancy. But yes, that is most important, because the moment we forget fundamentals, I think we have it. So, excellent accounting knowledge. Why accounting knowledge? Because how any transaction or its accounting changes the presentation of my financial statement. If I am able to visualize it, I think I will be able to do that one. So sometimes I feel that people do excellent work on Excel. They prepare balance sheet, formulas are there, etc. But the moment, even with that particular thing, when my articles come, sir, there is a difference in the balance sheet. I wonder really. Whereas your spreadsheet is ready, formulas are ready, still sometimes this is there because you don't understand the implications, whether it is debit or credit, and then you get the difference. Finding out the difference from the trial balance, this topic is gone now. Earlier it used to be there, where you used to be calculate that, yes, difference divided by 9, if it is there, interchangeability of figure will be there. What is the difference? Means this one, any major head which is missing. So various things, because this type of manual accounting teaches accounting very nicely. But fine, now that we have to live with the time, and therefore, only thing is that you have to apply your mind from those golden rules. Data analysis. You have got different, what you can say, softwares, wherein if Excel is not supporting for the volume, then you can go for IDEA or any other software. So that is there. Creating testing hypothesis. See, unless we make the hypothesis, we will not go to a particular. If I decide that I have to come to BKC, then only I will come to BKC. If I decide that I have to attend this seminar, then only I will be able to attend this seminar. But if it is not, then I will be wondering, and if I am passing through over here, just chalo, let's go to institute, what it is there. But that's not the way. So there has to be some hypothesis, and that hypothesis comes out of your analysis. If you do analysis properly, hypothesis will be built up accordingly. You should have sound knowledge of various law. See, banking law, then Money Laundering Act, then Prevention of Corruption Act, case laws, various case laws, of course, situations, etc. Why? It's a simple thing that government officers cannot take gifts more particular amount from any of the client or this one. That is a rule. There is a gifting policy in every organization. In banks also it is supposed to be there. Now in this case, how far these aspects are really followed up properly, that we know. If you don't know, and what is more important is, you should know that organization thoroughly. Most of the occasions what happens, the balance sheet comes, we are fine with the balance sheet, we prepare a report, we prepare disclosures. But ultimately, what is the business of that organization and what are the processes they are following? If we know that, I think we can have better understanding of that one. There is auditing standard on that one. Understanding the, what you can say, business of the organization and the legal framework within which it is operating. Now, if we know that particularly, let me tell you honestly, I'm not, because initially when I used to read accounting standards and auditing standards, I used to feel it is for the purpose of examination. As I grew, and then when the, what you can say, argumentation starts between two profit, auditor and auditee, etc., my institute literature is much more helpful for me to deal with the situation. And there, it's my institute which guides me. That is the thing. I remember very well that somewhere in 2002, when the accounting standard 22, that is deferred tax asset and deferred tax liability, there is one section in financial institution and banking which states that if there is a deduction, if there is a business out of long-term finance, then you get deduction of 20% of that profit, 3618, those who are possibly income tax practitioners, they can know. Now, when I create that reserve, then only I can get that deduction. Now, when I am creating that reserve gives rise to deferred tax liability. And usually when I create or recognize deferred tax liability, it gets debited to my profit and loss account, my bottom line goes down. So industry was not very happy in recognizing that particular thing because my bottom line goes down. So I was arguing with one of the financial institute which is promulgated by particular act, statutory company, what we used to call it in Companies Act earlier, 1956 wala. So they said, I said, look, you have to create this particular. He said, I am not governed by Companies Act where accounting standards are compulsory. I have got this one. I said, my institute says it is mandatory accounting standard, and therefore as an auditor, if there is what you can say, there is no, if it is legally bound, any law makes it compulsory, I have to qualify that one if at all you don't follow that. He said, my law doesn't recognize it. So where do you question? I said, how to do the accounting is your job. To report on that one is my privilege. So if I feel that you are qualifying or your profit for the year is substantially displayed substantially low, then I can qualify the report, and that is what I can do by this particular accounting standard. I will mention in my audit report whether it's a disclosure, emphasis of matter. Of course, at that point of time in 2002, emphasis of matter was 700, 705, 706 was not there. So then he realized the thing that yes, we do have some authority. And when I show him, afterwards the opinion came, then Reserve Bank of India also came out with the circular that DTL has to be recognized on that particular reserve. But before that one, this type of literature was happy, and therefore my suggestion is whenever such type of problem or argumentation comes, please go back to the books, standards or so, and try to find out some way out by which we can very well plead our this one. Okay, coming to this particular thing, then understanding the business which I have mentioned, and most important is common sense, because that is something is eternal according to me. Red flags, of course, these are regulatory things, and this is from the banking angle, which may not be relevant. But what happens the moment in any bank, account is red flagged and the amount is more than 50 crores, it has to be informed to CRILC. And what is CRILC is, you get this, what is that rating? Which score? I got blank. Okay, there is a CIBIL score. So if at all, on the basis of CIBIL score, the bank gives you loan and all this thing, your credit worthiness is assessed. So CRILC is an institution where this CIBIL code score is maintained for individual. So if at all, as an auditor, I said this has to be considered as NPA, and the bank makes it NPA, it has got impact on your CIBIL code of that borrower. So these things have to be kept in mind. So if it is red flagged accounts, then it has to be informed, and RBI also says that within 6 months you have to decide whether it's a fraud account or any other way, then it has to go back to normalcy. So beyond 6 months, red flagging should not be there for such accounts. Either it should be classified as fraud, or you say that it's a regular account, you restructure or whatever way you want to. Then auditor to highlight the documents, instances which point the possibility of fraud to the top management and audit committee of the board. Now that NAFRA makes it compulsory that if there is amount involved is more than 1 crore and there is an involvement of the staff of any listed company, then auditor has to report this particular thing to central government. That is NAFRA, the agency. If it is less than 1 crore, then you have to intimate to audit committee. So wherever you are doing audit of any listed company, in the audit committee presentation, you should have one slide on fraud and try to intimate that one. I know these are frauds are found out by them, FMR1 is filed, whatever. If you suspect something differently, that's a different issue. But other than that one, if it is less than 1 crore, then inform to audit committee. If it is more than 1 crore, the moment it comes to your knowledge, within 48 hours you have to write to the company management saying that please give me the details of that particular account, fraud. They have got 45 days to do that one. Once you receive within 45 days, next 15 days, within 15 days you have to intimate to central government. So that's a compulsion. Only thing is that there has to be involvement of staff in that one. That is what has to be concluded. If it is other than involvement of staff, then this compulsion is not there. That is what you can say the interpretation of that circular is there. I think the circular is of something June 23. Those who are interested, they can very well see that. Then what happens is, borrower who had defaulted and have not committed any fraud would be debarred from availing any finance from various institutions, etc. No restructuring will be granted, and no facilities for the borrower is tagged, if it is tagged as willful, for 5 years from the date of removal from the list. Even if willful removal he gets removed, he cannot get that particular advantage. Now let's go to early warning signal. I got various, these are lists. Friends, there is a circular on that particular thing, and you can very well refer to Reserve Bank of India circular for early warning signals on this one. One is, these are very nice examples, almost around say 50 such criteria are identified. I have tried to classify them on various, what you can say, topics. This is on operation side in bank. Default in payment to bank. If somebody does it, then I will tell organizers to share this one also with you so that you can have, but these type of things are available on website of RBI. So default in payment of, payment to banks, bouncing of high value check, frequent bouncing, 1 or 2 incidences are exceptional one, but frequent bouncing is, that means there is a foreign financial straits, and when there is a financial stress, you can understand that that's an early warning signal for the bank about the credit risk in that particular account. So that is how we have to see. Then funds coming from the banks to liquidate the outstanding loans. On 85th day, 87th day, you get remittance from outsider, some unrelated party, that amount is adjusted against this one. Sometimes what happens, the term loan installment is recovered from cash credit limit, which goes above the limit, and then subsequently that limit is recouped, at least brought this one, because in case of cash credit amount, NPA says that it should be continuously there for 90 days overdrawn. So few days over here and there will not make that one as NPA. My term loan amount is received, and I try to maintain technically or theoretically that particular account as standard account. Now whether such type of things are there. Then foreign bills remaining outstanding for a long time. Usually it should not be, because if it's a third party, you can't say it will be outstanding for more than whatever credit period is there. But if it is happening, that means there is some understanding between the foreign party and Indian party, and they try to play with this one. Is it a case for money laundering also? That one need to see. So from these observations, these are what you can say impetus, and then you can go on what you can say investigating it further to identify whether there is genuine problem or anything. Sometimes there may be genuine problem, but let us understand that one. And therefore, when we do in bank the advances audit or some proposals we are scrutinizing, don't merely restrict yourself to the file, documentation and all this thing. Give equal weightage, equal weightage to operations in the account. Now, how operations in the account are more important, because from the operations of account you can get a lot of information, and banks do that. Earlier days it used to be a ledger account, physical paper ledger used to be there in the bank. When I started my articleship, some people will laugh at me, but the monthly stipend used to be 60 rupees per month. So every month there used to be a clearing of 60 rupees in my account. I used to deposit it religiously, And that's all. That was the banking which I was doing at that point of time. Since I was getting the check, I opened the accounts and that was there. One fine day, after 2 or 3 months, the counter clerk asked me, "Are you pursuing CA?" I said, "Yes, but how do you know? Because my face doesn't tell that I am doing CA or whatever." So he said, "No, it's every month you get 60 rupees clearing. That means I remember, I thought that you must be pursuing this course." So that is what you can say, using the common sense, common knowledge. Why I am giving these examples are, these are so common, sometimes we don't even understand that this is something which is relevant. That's why these are most important. So that was the thing. Then delay in payment of outstanding dues, then frequent invocation of B. See, bank guarantee getting invoked or LCs getting devolved is a bad sign. One thing is that financial problems, commitment problems, and more than that one is reputation problems. And in business, once your reputation you are lost, business or profession, then you are lost everything. It is very difficult to build up that one again. So from that angle, I think frequent invocation of BG or devolvement of LC is one of the signal. Funding interest by sanctioning another facilities. Whenever overdues are settled out of new sanctions, though RBI also very clearly says, but that's the first indication for any account. I won't say it's a fraud, by the way. Whenever I'm saying this one, this is something which people are going towards minus side, I can say. It's degrowing, or there is a siphoning of funds. Then movement in the account from one bank to another bank. Nowadays it is very easy. If you are not satisfying me from the facilities, then I will catch hold of something. And with the competition in the banks are bound to take this one. They just take it. And then you continue at least for next 3 months as the standard asset. You take enhanced facilities and get that one. This is early warning signal. Then not routing sales proceeds through bank. See, you have got in consortium it's a different, because consortium, one of the step is to share the common information, which is neglected nowadays by many banks, because they say that this is not happening, some practical difficulties are there, we don't have common time and etc. But I think that is the first downfall of any credit institution, when they neglect this type of parameters. But if I am having, say, account, people say that I have got account in HDFC because I want countrywide demand drafts to be encashed immediately. But my term loan facility is with particular bank, which is a local bank. How do you monitor your operations? Operations are with some other bank. Only thing is that monthly you get whatever EMI or whatever installments you have got, that is not sufficient. So when your operations are outside, ask the statement for that bank, where your operations are there, and try to understand what operations are happening. So that is there. High value RTGS to unrelated parties. Sometimes payment goes to builder, developer. That shows that your funds from your cash credit account, if at all it goes to developer or builder, then naturally you are diverting your funds and you are trying to build up out of your operating facility to this one. In CARO, you are supposed to report whether short-term funds have been borrowed and used for the purpose of long-term benefit or capital asset. Now this is something which is there. Then heavy cash withdrawal from the loan account. Nowadays, one has to definitely suspect if there are cash withdrawals which are heavy. Why do they need cash so much? Can they convert that one through proper banking channel? You have got so many banking channels, and fortunately in India, we are one of the leading, what you can say, people who promote banking channel, and there are facilities for that one. Now, if somebody is doing cash transactions, why? That will be a question. Next one is about the facility documentation. First one was on operations. Next is documentation, frequent change in the scope. If I am borrowing for the project and the scope of the project changes frequently, then there is a problem. It is like financial statements where your accounting policy changes frequently. Last year कुछ और था, ये year कुछ और था, next year कुछ और है. Then yes, you should doubt that particular why they have done this one and what is the advantage, unless government regulation changes. So you are shifting from IGAP to Indes, then it's a different issue. But other than that one, there is no reason for somebody to change accounting policy frequently. The dispute in title for collateral, then wide variance between the standard project and actual project cost. That means it's wrong. And secondly, even estimating the project at higher level, whatever your expenses are there, whatever statements, and from that angle, let me tell you, in cash credit account, bank insists that you should submit your monthly stock statements, statement of debtors and creditors, or statement of sales and purchases. Now, all these things gives you the idea about the operations of the company. As far as if you are doing bank audit and you are trying to look at particular account, try to analyze at least one account in such a fashion that all these statements, there is a common thread and properly it is drawn up. If you find that there is any gap, it's a simple, sales are increasing, your cash credit limit, you are asking for ad hoc cash credit limit, but at the same time, your debtors are reducing. It cannot happen, because if I am realizing something from the debtors or this customers, I don't need more cash. That means you are diverting somewhere. So that is how I think the hypothesis you can build up. Then onerous clauses in LCBG and all these things, these are all which are very difficult, and if at all you accept that particular thing, that itself indicates that there is something wrong. You can't commit something which is beyond your capacity. Same principle. So accordingly, import leg not revealed to the bank, whenever especially cross-border transactions, entire information should be available when you are financing somebody. Then request from the borrower to postponing the inspection of the godown. And same will be there for auditors also. If at all your auditee says, 2 hafte ke baad aana, don't do tomorrow. That gives you indication that there is something problematic as an auditor, because ultimately this risk analysis, we have to also do it in our profession. Financing unit is far away from the branch. Usually people would like to avail the banking facility from the nearby bank. Why they should have? That is, you have got financing bank in Mumbai and the unit is in Himachal Pradesh. The reason for that one should be known. Not that every case is a bad, but such cases gives me a rise for doubt, and the doubt has to be clear. Same collateral charge to number of lenders. Nowadays, MCA side gives you various details of the charges, who are the borrowers. Sometimes what happens, the charges are not vacated, and that's a first indication that you should very well ask for the company to vacate that particular charge. So there are problems with all these things, but nowadays most of this information is available to you through net, and therefore that should be used. Concealment of vital documents like master agreements, insurance coverage, etc. If bank considers that one. Let me tell you one thing, because I will come to that one when I am discussing on Schedule 3 disclosures. But shareholders agreement is most important document when you carry out the audit of any company. And you have got some, what you can say, percentage of shares is held by either private equity fund or some group of people. That agreement is most important. One should go through that one. So there should not be any onerous clause or any restrictive clause by which, and then there can't be something like commitment for percentage of profit. What I mean to say is the company will have at least 20% profit every year. If this type of clause is there, then if it is below 20, you are bound to make some jugglery in your accounts. So that one need to consider. Critical issues in stock audit report. Stock audit which is carried out sincerely, because he is a person who goes on the site and he tries to get that particular thing. In bank there are inspections, but my experience about those inspections are, they are more as the formality. The bank officer carrying on inspection is more as the formality. Some people prepare genuine report, some people do not prepare genuine report. Some people do genuine work, some people do not do genuine work. They go there, have a cup of tea, then discuss with him some things here and there. Nowadays, even banks are interested in enhancing their loan portfolio. So they try to tempt the person that we will finance you for something which is unproductive way. आपको कार लेना है, ये कार market में आया है, we will finance for that one. What is the use of that one? If you go for expensive cars, rather than that, funds should be in this one. So utilization of funds for productive purpose is also end use of funds which Reserve Bank of India says. Frequent requests for general purpose loan, ad hoc loans. These are quite what you can say. Then LC issued for local trades to related party. One need not have that one. Why do you need LC? LC can be discounted subsequently, and then you try to have dual funding because the other party must be enjoying facility from other bank. Here you are taking LC and against LC you are discounting that particular thing. You are enjoying the funds. So this is something. I'm sorry. Non-submission of original bills. Nowadays this is not the normal thing. RBI is still at the old stage, I can say. People go by scanned copies of this one, but at least original should be seen and try to see wherever you can verify. And nowadays GST site is there, so you can easily track those bills whether they are genuine or not. Then we come to the financial and other aspect of the borrower. There are under insurance or over insurance of inventory. No reason for that one. That means the stock statements submitted by the borrower, they are fake statements. They are only matching to the facility. At some bank audit I have seen, which I have already mentioned from this dais, that is bank manager has got blank stock statement signed by the borrower. The moment auditor comes out with the query that stock statements are not submitted, he will say, I'll arrange for that one. After 2 hours, you get stock statements and you find, then you try to see that 6 months stock statement together. There you find that what items were there for 6 months back, the same will appear currently, because branch manager doesn't understand as to what is the business. So he will copy from something else and try to satisfy the auditor so that your remark is omitted. Now we have to carry out the audit in literal spirit, not by mere documentation. So that's why we should see. Then claims not acknowledged as date. That gives lot of things for me. And what is the process by which this information is collected or what you can say collated, so that this can be presented correctly in the financial statement. एक और दो मिस हो गया तो क्या हो गया? AS29 gives you the option that yes, management feels that we will be successful in this particular thing. We don't have any what you can say liability on that one. That could be the argument. But ultimately there should be process by which contingent liability should be identified, and whether that tracker is maintained properly or not, including the whistleblower complaints. See, whistleblower in listed company is most important thing, and there has to be a proper record, so you get to know exactly what is happening from outside. What are the whistleblower complaints, how you have resolved that particular thing, what action you have taken on that particular aspect, that that nation. Then floating for the associate company by investing borrowed money. I'll come to that example also. What is this? Reduction in the stake of promoter and director. That shows that you wanted to do business on somebody else's fund, and my risk has to be minimum because you perceive that that risk is more. Then substantial increase in unbilled revenue year after year. Schedule 3 disclosure on trade receivable specifically asks you to reflect, is there any unbilled revenue? And that unbilled revenue has to be mentioned over there, how much it is. So typically what happens, that is every what you can say disclosure which is stated, those who have not read that particular thing so seriously, Schedule 3, I'll earnestly request all of you to read that one and try to understand what is the intent behind that particular disclosure. When ILFS matter came out, there are number of disclosures which have increased in Schedule 3. Few years back, I think 5 years back, this money trail, 3 clauses you report, na, any amount given as advance, ultimate beneficiary is not your related, whatever amount is taken as advance, the ultimate beneficiary is not your, or it is siphoned to beneficiary is your related party. And the auditor, this has to be confirmed by the company, and the auditor has to say that we have not noticed any such transaction. So from that angle, all these aspects comes out of some incidents, and therefore ILFS was the best example for that. I can name it very clearly. So such disclosures comes only because of such aspects. So substantial increase in unbilled revenue, then large related party. According to me, related party disclosure is the best, what you can say, source for you to understand various things and analyze it. You understand what way the entire group is functioning. And when I say related party, if there is group where you prepare the consolidated financial statements, so standalone and consolidated both putting together, you get lot of information if you analyze it properly. Then movement in inventory receivables higher than the growth of turnover, disproportionate growth you can say, disproportionate increase in the current assets. Yes, you have got trade payables which are more. What is the reason for that one? Is it because of this one? You have got lot of trade payables, at the same time you have got fixed deposit in bank, or you have got some investments. There is an investment property. Why? So that will be another thing. Significant increase in working capital borrowing as percentage of turnover. All these things come out of disproportionate things, what we have already studied as the technique. Increase in fixed asset without corresponding increase in the turnover, or I can say even increase in borrowed funds. Because if it is for fixed asset, it has to be from the borrowed funds or own funds. Similarly, the analysis of cash flow from the operating this one investing activities and financial activities, that analysis is most important, because continuously, if at all you are trying to say negative cash flow from the operating activities, that's a big indicator for such type of early warning signal. Increase in borrowing despite of cash in the balance sheet. Yes, you have got cash resources available, still you borrow heavily, which is not something which is logical. Liabilities in ROC search report, if it is there, then that should be there. Then this continues. Material discrepancies in the annual report. What are the qualifications? What are the discrepancies which are shown? Whether disclosures have been shown properly or not, or is it something that the auditor who is hired as a professional, he is not competent to deliver it properly? Then in that case it is so. Or some auditor who will normally say yes to the management, then that's it. Independence of auditor is hampered over there. If you doubt that particular thing, naturally the disclosure part, there is a problem. Significant inconsistencies with the annual report. That is, what is there in board report, what is there in financial reporting. These two differences are there. Poor disclosure of materially adverse information and no qualification in the statutory auditor. You doubt on the independence of the auditor. Frequent changes in the accounting period and accounting policies. Non-financial aspects are invoices without TAN or other details. Now, of course, GSTN will be there. Resignation of key management person or frequent changes in the management. These are physical aspects, because that means the people at the top are not really owning the responsibility. They want to run away out of this situation. Market related information, I can say, read by the government authorities, income tax or any other GST. So these are few, what you can say, things. Now I'll come to straight away Schedule 2 disclosures, because that gives you impetus for various things. Why these disclosures are there? Right from share capital, suppose in the share, this one, Schedule 3 says, more than 5% shareholding has to be disclosed. Why? Because then you understand how the shareholding is there. There is another clause that gives details of the promoters also. So what is the promoter stake? Whether it is diluted, you have got year-on-year position, both comparatives are there. And not only that one, if there is a change in the composition of shareholding, you have to give one column last as to what is the change over the previous year. Then you have to give the reconciliation of shares at the beginning of the year, issued subsequently, and then closing balance. And not only this is not enough, ultimately you have to also mention whether there is any options attached to various documents or what are the terms of these particular. Therefore, we write that the above things have got all rights pari passu to general things, and they rank post satisfaction of outside liabilities, etc. So these aspects gives you a good, what you can say, read or understanding about how the capital structuring is done. Not only that one, you have to say which is the holding company and which is the ultimate holding company. This is very common that tomorrow some of the multinationals in India, if you ask them who are your real owners, it's very difficult for them also to say that who are their real owners. Now, of course, it is very clear. Most of the occasions these are disclosed, but otherwise earlier this used to be said. Because people used to have some, what you can say, tax planning done through tax havens. And therefore, the original company, funding company used to be in Cayman Islands. It will come to Mauritius. From Mauritius, funds come to India. India will have one funding company. Then it will have subsequent company. As if Mauritius route is not enough, you can have one more route through Cyprus to Mauritius. All these things, if you see old structuring, I think we can very well understand. And there what happens. And this is something, according to me, we professionals have created all this kachra, what you can say. Reason is, it's a professional opportunity some people feel. But mind well, right now, at least I am at this stage that most of such tax plannings, they are winding up those in between intermediaries, because it was just this share to this share, this share to this share, I mean, so holding to holding, I mean, ulta, holding and ultimate holding. Now, Schedule 3 asks you to give specific disclosure about ultimate holding company. And therefore, that has to be. How as an auditor I will see it? See, first thing is that everywhere this ownership has to be understood properly, and therefore all these documents are most important. Somebody saying that it's our foreign counterpart who is not ready to share that particular, etc. He said that we will qualify the report. Because, see, financial statement is a property of somebody else. My product is my audit report, and there my institute as well as law had given me that you can make statement of facts and statement of opinion. So both things I can very well do. If my opinion is something different, which is within that 700 series essay, you can have that one. Either you have got clean opinion, modified opinion, and within modified you have got qualified, then disclaimer of facts or adverse opinion. All these things will be there. Next one is about the disclosure of share application money. That has to be shown separately. Previously, what used to happen, people used to form the company and there used to be current asset wherein a share application money receivable. Share capital is allotted, but money is to be received. Nowadays, that position is not there. Either there is application or no application. And within that one also, Companies Act say within 60 days you have to allot the shares. So if that is not there, you have got violation of Companies Act. So specifically, acceptance of deposit is another thing which gives you this one. In Caro, we also mentioned that particular. Share premium account is one of the important things. At what premium the shares have been allotted. This is also, and that should be disclosed. One more thing is about the consideration for other than cash, shares issued for consideration other than cash. Earlier, it used to be perpetual note. Now they say for 5 years after that transaction, you have to continue that note. New this one, 2013 Companies Act. What this indicates is this information as an auditor or forensic auditor, forensic accountant, gives me lot of information when I read the financial statements correctly, and therefore even as an auditor, sometimes mere reading these information or financial statements gives me a lot of information about the company, and which one should have that habit of reading annual reports. And therefore, whenever not only we are signing, see nowadays very honestly, we are signing number of balance sheets. The size of the balance sheet is increasing, and therefore there may be a case wherein each and every word from the financial statements may be read by the auditor who is signing that one, or may not be read by the auditor. तुमने देखा है ना? चलो, then I will sign. This within 4 walls I can speak, not outside. But if that is the thing, we run a risk. And therefore, not only reading of those things, but analyzing and understanding, applying your mind for all these things. And therefore I said that Schedule 3, if you read from application of knowledge angle, that what is the, what you can say, reason for that one, I think that will help you a lot. Not that I am somebody different from you, but this is what by experience you feel that yes, this is what is required, and all my professional brothers and sisters should follow this particular. That's why I am trying to tell you over here. Otherwise, it is not something that holier than thou. Yes, I am somebody great. Not at all. I am also equally, I am also practicing. Therefore, I said whatever introduction you have, we are always practicing CA profession. We are never proficient in the CA profession. And because government doesn't allow us, no, every time new law comes. इनकम टैक्स हो गया तो डायरेक्ट टैक्स कोड आ जाएगा, पढ़ना ही है. तो इट इज़ डी लर्निंग, री लर्निंग, एवरीथिंग हैपन्स. देन वी कम टू ट्रेड पेएबल. ट्रेड पेएबल nowadays you get aging. Some of the balance sheets which come to me for review within my organization also, there you find that 1 to 2 years and 2 to 3 years of our subsequent year, you can find out the gap. 1 to 2 years if it is outstanding, and 2 to 3 years something is what you can say blank, but still your payable level is more. You should have that question as to why this is. It may be right also factually, but these are some of the points by which we can question. And auditing is what? It's an inquiry by various method. One of the method is questioning, and the moment the art of audit, when I say it's, though it is otherwise called as science or whatever you may, but it's an art. It's the art of questioning. सामने वाला बुरा भी नहीं मानना चाहिए. At the same time, my purpose has to be served. I should get the information. So that is how the questioning has to be, and therefore it is most important, because this is what is required. As we mature, we understand this one, but as our new population coming in, because ultimately at the ground level, article students are there. So this is one aspect which has to be emphasized, and therefore in your induction training to article students, these few aspects are more important. How to communicate, understand your position, the person with whom you are dealing, they have achieved the position. So typically as a central statutory auditor at bank, if I go, all people who interact with you is chief manager, AGM and above. Now their kids may be of our article's age, and if we go there as auditor and we try to be arrogant, that's a problem. If we try to be submissive, still there is a problem, because people can explain you anything and you accept that particular thing. So this is the equilibrium one has to find out. So few aspects, that is this aspect plus confidentiality. Nowadays with mobile and all these things, how data confidentiality has to be maintained is most important thing. So these are few things which one has to be very clear. As far as the trade payable is concerned, aging analysis is one thing. Interest which is there under MSME law, that will be another information which you will help, because if at all somebody is consistently delaying the payment, in spite of knowing that you are supposed to disclose the interest out of that one, and that interest is not allowable under income tax if you don't pay it within time. Whenever you pay, that is different, but at least year end you have that particular problem, and therefore that is another area. In case of investment, if you see in schedule 3, not only you have to give the book value, but you have to give the face value of that particular thing, market value of the investments. So that gives me an idea as to what is the quality of investment. And if your quality of investment is there, even if you say it's not permanent diminution in the value, and therefore you don't provide because it's a long-term investment or HTM in bank, still you have to take care of this aspect. Then in case of this one, trade receivable, again, receivable you have to give the aging analysis. Unbilled dues I have already mentioned. Dues from directors have to be separately shown. And therefore, I always like what you will see first, honestly, is the RPT schedule, that is related party transaction schedule. Try to see that one, what is the turnover, because you get exactly idea, because how turnover gets bloated. Holding company sells it to subsidiary company to fellow subsidiary company, therefore your turnover gets bloated. If standalone statement shows X turnover and the same turnover is there in consolidated statement, that's an indication for you that there is a intercompany transactions. Now these are few things which you can pick up. As far as the bank statement is concerned, bank finance is concerned, the stock statement submitted to that bank, most important, try to take all those statements, analyze them, try to see that one, what is the disclosure they are given, is there any change in that one, is it that the stock is bloated, the working capital limit which is really judged properly, or is it something which is taken, funding out of that particular thing, that is if at all the funds have been diverted, that is out of cash credit the directors have taken loan and invested into shares or capital market, then that's a risk. It is an individual name or family member's name, then that's a problem. So that is one thing. Secondly, funding arrangement. See, what is more important in case of bank finance also, even as a chartered accountant, we have to see what are the facilities they have taken, and is there any cheaper mode which was otherwise available. Say for example, I borrow from my family members at 12% when my bank finance is available at 9%. Then that is not correct, because then what happens, you are trying to play within the group, within the family, and then in that case why it is not so. Investment you can do otherwise. So too much of unsecured loan from the family members or group is another indication. Use of funds, if it is borrowed for specific purpose, then it should be used. If it is not, it has to be mentioned in the financial statement. So therefore that is there. I know that most of the people are not mentioning this particular, nobody will say, they will try to say money is fungible and all these principles. But if you come across such things as a client reading also, you can have this particular. Willful defaulter is one of the dangerous situation, wherein if at all it is declared as willful, and along with that one there is one more disclosure, that whether you have got any transaction with the strike of companies. That means, yes, you are with somebody else who is not really functioning well. So if such type of transactions are there, there will be, that's a signal for you. Then property, plant and equipment, fixed asset schedule. You have got title deeds you have to report. One thing is that the company has to report. All the titles are in the name of company. If it is not, then which are the properties where title deeds are not clear, whether it is in the name of company or not. Sometimes the cars are purchased. This is basically on case of immovable property specifically. Sometimes what happens, especially some properties are in the name of director, and that is used for the purpose of business, which is also accounted for number of years in the business. Now such type of things have to be disclosed properly. And as an auditor in Caro, I have to comment on that particular aspect. So I have to specifically disclose that. One more aspect is about the revaluation of the fixed asset. Why revaluation? We have got historical cost concept, and therefore as far as the revaluation is concerned, that gives rise to enhancing the value, enhancing the reserve. somebody can argue for revaluation. Nowadays we are going for Ind AS and there it's a fair value accounting. So always you have got arguments for that one. But this revaluation, how it is done and whether it is properly carried out or not, what was the purpose for carrying out the revaluation, that needs to be seen. One more aspect is about capital work in progress. Nowadays you have to give the expenses which are made for last 3 years, or year-wise expenses have to be done, and what is the amount which is transferred or capitalized in the project in property, plant and equipment. This gives you the idea that the amount is not unnecessarily lying on in capital work in progress. Not only that one, what you try to see is you have to disclose the suspended projects also. If some project is suspended, it has to be written off. So if you call something as suspended, it has to have impact on your bottom line because it will get debited to your profit and loss account. And sometimes in order to show fabulous results, possibly you would like to postpone these incidences, and therefore that is one of the early warning signal. Benami properties, then registration of charge, satisfaction of charge, these are another thing. In case of revenue also, other than expenditure, profit and loss account, whatever disclosures are there, other than that one, you can see in case of revenue, major product you deal in. So from your profit and loss account, you understand what is your operating income and what is your non-operating income. That has to be identified. Disclosure also says, apart from what you can say money trail, in case of some transactions where ultimate beneficiary is your related party, you have to also give something as cryptocurrency transactions. What is the purpose of cryptocurrency transaction? Though I can say it is not legalized, but it is not called as illegal also. So from that angle, if at all somebody is doing any business in cryptocurrency, this is one of the because ultimately you don't know the source and who is monitoring that cryptocurrency. Friends, these are few things which what you can say try to give you some early warning signals out of this one, because this one. Now as far as the frauds, few illustrations are already there, and then I am trying to give you various what you can say frauds, different things. See, these are few examples wherein you can have different things. See, my first thing is scheming. That is, you take on something, some substance which is at the upper level, you try to take out of it so that people feel that yes, this was something which can flow out of the operation. So somewhere that is called as scheming. Cash larceny is taking out cash out of the business. So various examples for that one. Fake bills, that unnecessarily you bloat your expenses or capital assets. Wherever you need subsidy, etc., people try to take the fake bills for various projects. So that is there. Ghost employees, Satyam, all of you are aware of. So ghost employees, number of employees which are there, which are not there, you take salary in those names. Expenses reimbursement schemes for various things, which is exorbitant expenses are reimbursed or unreasonable expenses are reimbursed. So that is another thing. Inventory misuse. This is something wherein inventory is a floating asset. So valuation of inventory, then work in progress, overheads allocation. These are few things. Apart from this one, I can also tell you, whenever there are group companies, allocation of expenses is another forgery. Because then you try to manage various things in such a manner that if you want to glorify some company, you can show profits over there. Now, this is one indication when your allocation changes frequently. So that's an early warning signal. As far as the type of frauds which are, I can say this is internal, you can say. Externally, you have got bribery, you try to take the projects, somebody you bribe, do some illegal work. So if you find anywhere expedition money, as I mentioned to you about the advertisement, marketing, professional fees, commission, these are few examples whereby you can suspect, because whenever you get any professional fee, ask for the document for which it is paid. If professional fees are there for carrying out some feasibility study. So where is a feasibility study? That is what is most important. So that has kickbacks. I need not explain. Then bid riggings. Now you have seen that if at all Shah Jahan used to have the tender for Taj Mahal, what would have happened? This is one thing whereby tenders are taken by bid rigging process, that this is allocated to me in my group. A, B, C, D come together, prepare a cartel, and then try to do various, try to capture the tenders. Money laundering is another thing. Wherever there are cross-border transactions, money laundering is possible. Not that everywhere it is there, but you should be cautious about that. Fictitious revenue booking, non-provision of losses, incorrect asset valuation, siphoning of bank loan, which we had discussed, shifting of profit to shell companies. Now, if at all in a group you have got number of companies, understand as to what exactly is the purpose of that particular vehicle. Even if it is SPV, you try to understand what is the. Now we try to see, these are not something which is great, but few examples by which how things can happen. Say A Limited is a borrower, which borrows 60 crores rupees, tries to pay to B, which is unrelated party, as advances. Then B to C, again it is shown as advances. C to D, which is a related party, shown as advances. And then D gives it by way of, because it is a related company or subsidiary, they are given this particular thing to the original borrower. So what happens? I will pay 60 crores at one stroke, or I can go on paying it slowly, because A can borrow, but D cannot borrow. D doesn't have that capacity to borrow. So I try to route it in such a fashion, and for the bank or any person who is trying to look at the financial statement, they will never understand that A had borrowed for the purpose of D, because transaction is such that you cannot directly establish some money trail. It is coming in a circuitous manner. So that is way by which bank finance fraudulently done. Second one is purchases at higher value and sale at lower value. So I try to transfer my profits. Very simple. Then money laundering. I had tried to see, this is another case of layering, I can say. See what happens. There is something called as Ponzi scheme also earlier. So you collect money from different sources in small quantum, put it into some layer wherein it is less than that particular numbers are there. Then you bring it to some vehicle within which you can collect all this money, so that as if it is money of that particular, here it is partnership, because partnership is not governed by Companies Act also. So I try to do this one. Partners can also easily withdraw out of that particular, because there is no restriction under Partnership Act. Then you try to put it as some payments to B, C, D, and they in turn subscribe to the share capital of A. A gets money. Whose money it is? It is basically of all those magenta color people, that is J, K, L, M, N. So this is different layering, you can say, by which you are seeing only the surface layer of 4 and 5. And therefore, for any such transaction, which is this one, go to the root of it. If you know that one, that will be definitely beneficial. This is another way that A sell product to related party and purchase from another related party. Same proportion, same thing, but then it gets knocked off as receivable and payable. Because of that one, what happens? The purpose is I try to bloat my turnover, and accordingly I try to show off that I have got so much turnover as a group individually. Then forensic audit, what is more important is where there is a beyond industry performance. If industry is showing say 10% growth and my growth is 20%, if you go to particular thing, the profits are normally at 10 to 15%, while you are saying that my profits are 30%, then naturally that should give you rise for forensic audit or forensic accounting, whatever terminology being used. Then consistent growth in profit before tax, while operating cash flows are continuously to be negative. I have already mentioned about the analysis of cash flow. Very high level of transactions with related parties. So RPT analysis is most important. Transactions with the parties which do not appear to be related to nature of business. I am into construction, but transactions are with share broker. Then that's a problem. Then high level of bad debts and write-offs, which is also another thing by which you suspect that there will be fictitious bills. Knocking of debtors against the different creditors. That is also, if it is with one party then fine, but with two different parties it's a doubtful thing. All compliances are impeccable. No interest on TDS, advance tax, no substantial refund, etc. So this is there. Fictitious asset is another thing in the balance sheet, wherein you find that income tax, so much amount is paid, refund is not coming and all this thing. Then you should say that what is the position of that one. Nowadays you have got income tax side gives you various action points or pending things, so that can be seen. You can get that login open from that one and get that report or get the printout of it. Frequent changes in accounting and compliance related to staff. Promoter's lifestyle is most important. I think Malya is the best example for this one, so you can understand this. So that is precisely what you can say, what I would like to. Of course, I am not counting as to how many minutes are pending, because 1:15 is already there. But if there is any question or doubt, otherwise what happens, the criteria for best speaker is, I was told when I started public speaking, that it is not what you speak is more important, but you should understand when to stop. Let me exercise that wisdom if there is no query right now, because I don't want to be in between you and your lunch. So friends, thank you very much. I should thank the organizers, WRC, of course, our own WRC you can say. So therefore there is no distinction between WRC and ourselves. But yes, giving us this opportunity and sharing few thoughts, because I strongly believe that whenever you want to speak on a particular topic, you study that topic slightly in more fashion. That is the thing. When I was carrying out audit in my articleship and when I have to sign a small balance sheet after I qualified, possibly the involvement and intensity was different. So that is what is the thing. So thank you very much for giving me this opportunity and your patient hearing. Thank you.